In this video, we're going to be analysing Palantir ticker PLTR. Now, I thought this would be key because we have been covering this recently. Even a lot of the comments were saying it's going to keep going up. We're going to be looking at $20 before we look for a pullback. Now, we went through our trade plan, and as you can see today, we have started to get out of this stock. Now, we'll go through the trade plan, then we'll go through the analysis of what we're looking at. So I've been looking to trade this the same way like I do when a lot of these kind of smaller, more hype stocks pop. And that's by going through one kind of key strategy. And actually you can see the fills down here. But what it is looking for kind of recent or kind of quick expirations and then going through covered stock. So what we look to do, and I was just playing the 15 strike. They just seem to have the most volume at the time I was trading them. And all it's looking to do is buying this. So what this does is, actually that's the wrong way. If you do this, so what it does is short 100 shares, you buy a call. So what this does, and we'll go through this on the Analyze tab, it defines your risk. So even if the stock goes against you, obviously we are protected. But if it goes our direction, we have upside. So what you can see right now is it's costing around $14.50. What this basically means is whatever this is to your strike is your max risk. So you can see right now our max risk would be $50. And then again, as it continues to fall in price, there's upside. Now we got a really good trade on this, and I think it was shown here. Here we sold $14.95 this morning. Obviously we were hitting near $17, so the likelihood of coming down to $15 is quite low, at least from the majority standpoint. Now, to me, the stock is extremely overbought. Like when we do our analysis, we're extremely overbought. So anything above $15, I know we're most likely not going to trade above there for long. So ideally, I look to utilize and kind of make money on that pullback. But even if we don't make it back to $15, we would still be in the money. And considering it was only $5 max risk. And again, I can show you this on the Analyze tab, the exact trade we took. So if we lock this, we change this to $14.95, which is what we paid for it. If it continued to go against us, $5. Again, we got in here. So we got in at 16.67 was where we shorted those 100 shares. If it continued to go against us, who cares? We lose $5. But in this case, it came our way. And so that's where you can make all the money. Now it's selling for, around $14.50. So for a $5 risk, you could already be up about $50 on the trade. So these are the trades I like, because again, the downside risk is little, the upside risk can be quite massive. So that was kind of the trade plan and how we traded this. You can see we covered we covered 200 shares, but we only sold 100. It's because we did get into this trade, I think yesterday, or maybe the day before. Oh, it's not showing when we zoom out, but we did get short. I think they were around $15.80. So again, we had 200 shares short with the 2 calls to define that risk. So that's how we were playing it. Now let's go through the analysis of this. So what we can see is, where are we? And again, you can go back, watch yesterday's video on it. You can go back, check last week's video on it. What did we talk about? When this stock is trading above its third deviation. So in this case, $15 on the 6 month or $13.70 on the 1 year. Whenever we're trading above these third deviations, we are extremely overbought, and really we look for that stock to pull back. Again, I'm a reversal trader, so that's how I look at it. As you as a trend trader, or if I was doing trend trading, that would usually be my final target. To me, to kind of hold stocks through that level, it's just a lot of risk. It's very rare that stocks tend to trade above and hold above this level. If they tend to go outside here, you tend to reverse below it quite quickly. And again, it's exactly what we saw today. And this is why I like trading these short buys. As you can see, look at the move to the upside. Like, you can go see these 4-hour candles. The upside ones aren't all that big. You get this red candle, that is a big downside. And that's what I like, is the short side tends to go a lot quicker than the upside. But what you can see anyway, the key thing I wanted to point out was third deviation. The highest one is at $15.10. If Palantir is above this level, really we expect to start seeing pullbacks and look to trade it below that level. And that's why I try to get short above this level, lock in profits as we come below. Now, on a stock like Palantir, it's not to say it can't continue up, and that's why I lock in profits quite quickly on a stock like this, because if it continues high, we can just trade it again, look to make some quick money. If it continues to the downside, again, I'll ignore it. We've made money on the stock, don't need to keep trying to retrade it. So those are the key supports on the way down. If we go further, we have $13.40, then $12.10, $11.65. Now $11.65 would kind of be that final target I'd pay attention to if you're holding shares short or you're holding puts. I wouldn't really be looking to hold past $11.65 just because it's when we come into a bit more of a reasonable trading area. And if there is hype in the stock like there is right now, trying to short it lower than that can just be taking on extra risk when there probably is going to be a better opportunity elsewhere. So again, below this level, well, we expect it's coming in to today and probably the end of this week, we still expect to be kind of below $15 from a reasonable standpoint. Again, if we're breaking above the highs, $17 or above now, again, we are extremely overbought. I'll be looking to do the exact same trading plan if we break above that level. So I won't be adding or looking to trade this at all until we break $17.16. If we break that, again, shorting the shares, buying the calls to define that risk. Again, if it's coming in later to the week, so again, obviously we're going to be looking Thursday, Friday. We can look to play this week's expirations, but you're going to be taking on risk because you need it to play out basically that day or the following day. So we can play those calls, or we can go out a week or two further. But again, then it's just going to take longer to kind of get in the money on those trades. But again, even if we just want to play the quick pullbacks, usually when we're breaking highs, look what happens in the past. We break highs, we pull back quickly. And again, we can actually clear these to make it as clear as possible. You can see, broke this high, quickly pull back below it. And again, that's the move. That's all the move you need to make money on a strategy like this. If it goes against us, our risk is defined. As soon as it starts coming our way, we're in the money. And again, what happens the next time we broke the high, instantly start to pull back. Break the high, instantly, well, starting to pull back. Or we got a small pullback actually on this one. Actually, well, the first one was here, and the first time we hit that, big pullback. This one took a bit longer to actually break even on this trade, and actually this was, I think, probably the one I started, the one where we got short around 15.80. Would have been around this trade here. You can see it kind of took a bit longer for this one to actually start to break down, but overall we still got that breakdown. And again, if we got defined risk even for the week, it can take 2-3 days to pull back. That's fine. So again, the next trade opportunity I'm looking at on Palantir is if we break $17.60, looking to play that short bias. Again, on this stock, we tend to break through it by at least kind of 25 to 50 cents. So when we break that, I'll probably be looking to get short around $18 and look to play that downside move again. And especially if we can catch the top again, we got short near the 16.60. And it still, it still went 30 cents against us, and that doesn't include the one we got the day prior. So what this really means is, again, that the closer you can get to that top, which again, we're never going to be able to guarantee, but the closer we can get to the top, the quicker you get in the money, the more money is to be made. And especially when the risk is that low, like today, these are my favorite trades. And the ones really I do need to start taking with more size, because again, I could have done that with 10 contracts, 1,000 shares short. If it goes against us, we're risking $50. In a case like today, you would have been up $500 just from that small or relatively small pullback compared to the risk. Thank you for watching. If you enjoyed the video, you will probably enjoy this video too.